Let me be completely direct with you from the very start. If you clicked on this video expecting confirmation that secret redemption centers are open and your Iraqi dinar is about to make you an overnight millionaire, I have a professional and ethical obligation to tell you that you have been profoundly misled. The story you're being sold is a dangerous fantasy, and in the next few minutes, I'm going to dismantle it piece by piece with cold, hard facts from the world's most credible financial institutions. The truth about the Iraqi dinar is not a thrilling mystery. It's a complex economic case study in stability, reform, and the harsh realities of a post-conflict nation. The narrative of an imminent, massive revaluation, or RV, is not just speculative, it is actively contradicted by every official policy statement, central bank action, and international economic assessment available today. So, before we go any further, I need you to do something difficult. Set aside the emotional investment in the dream you may have been sold and prepare to look at the evidence. This isn't about crushing hope, it's about empowering you with truth to protect your finances and your future. The real story is more nuanced and, in many ways, more important for anyone interested in global economics or the future of Iraq itself. The cornerstone of this fantasy is the promise of a revaluation, a sudden, orders of magnitude increase in the dinar's value against the dollar. Proponents claim this will happen overnight, triggering wealth for holders. But here is the undeniable reality from the ground in Baghdad. The Central Bank of Iraq is not engineering a skyrocketing currency, it is fighting a daily, technical battle to prevent its value from collapsing and to maintain painful but necessary stability. In early 2025, their focus was squarely on managing liquidity and controlling inflation, not planning a global payout. The International Monetary Fund, which works directly with the Iraqi government, has been explicit. Their latest statements don't whisper about a coming windfall, they warn of elevated risks and stress the critical need for fiscal discipline in passing a comprehensive budget. These are the words of crisis management and long-term rebuilding, not the prelude to a currency miracle. Think about it logically, why would a government and central bank, in the midst of such delicate financial maneuvering, intentionally trigger economic chaos by multiplying their currency's value by 1,000 or more? It would obliterate their export economy, crush their budget planning, and create financial pandemonium. This leads us to the most tangible piece of evidence you can check yourself, the actual, tradable value of the Iraqi dinar right now. Go to any legitimate Forex trading platform, Reuters, or Bloomberg. You will not find a chaotic, skyrocketing line graph. What you will see is a currency pegged to the US dollar, trading in a deliberately narrow band. For years, the official exchange rate has been held around 1,320 dinars to $1. Recent central bank interventions have aimed to bring the volatile parallel market rate, where people actually exchange cash, closer to this official rate, not to launch it into the stratosphere. The goal is unification and stability, not revaluation. This is a monumental technical challenge for them. When the gap between the official and parallel rates widens, it fuels corruption, hurts the poor, and stifles real investment. So, the central bank's success is measured in bringing the rate down from, say, 1,500 to 1,400 to the dollar on the street, a move that strengthens the dinar's real purchasing power for Iraqis in a meaningful way. This gritty, unglamorous work of shaving hundreds off the street rate is the real RV happening, a slow, difficult crawl toward credible value, not a magical leap. And what about those redemption centers or banks supposedly ready to exchange your notes for life-changing sums? Let's consult the actual policies of the world's largest banks. Take JP Morgan Chase, for instance. A direct look at their foreign exchange policy is devastating to the myth. They state clearly, we do not offer Iraqi dinar. More importantly, they issue a specific warning, be cautious of investment opportunities involving the Iraqi dinar. We're aware of scams. This isn't an oversight, it's a definitive, risk-based policy. Major, regulated financial institutions want nothing to do with this speculative asset because it lacks legitimate liquidity and is shrouded in misinformation. If the largest banks on Wall Street, with all their resources and intelligence, are refusing to touch the dinar and warning their customers about it, what does that tell you about the legitimacy of the investment? They are not part of a conspiracy to hide the truth. They are adhering to compliance and reality. The promised network of ready buyers simply does not exist in the regulated financial world. Your exit strategy, the entire premise of cashing in, relies on finding another private individual believer to buy your notes, not on walking into a bank and receiving a fortune. The market for these notes is a closed loop of speculation, utterly disconnected from the actual Iraqi economy and the global Forex system. Now, let's address the human element behind these numbers, which is perhaps the most sobering part of this entire discussion. The story of the Iraqi dinar is not just a tale of economics, it's a psychological case study in how hope, when mixed with financial desperation and sophisticated misinformation, can be weaponized. Think about the very nature of the promise being sold, a secret, guaranteed windfall that requires no skill, no deep understanding of geopolitics or central banking, just the simple act of acquiring these notes and waiting. It's a fantasy tailor-made to bypass the rational mind and appeal directly to the emotional desire for a life-changing shortcut. The narratives are always urgent, redemption centers are opening. The window is closing. Designed to create a fear of missing out that clouds judgment. And they are always wrapped in a veneer of plausible complexity, citing outdated UN resolutions, misrepresenting IMF reports, or pointing to Iraq's vast oil wealth as proof of an inevitable currency explosion. This creates a compelling story, one that feels more tangible and exciting than the slow, disciplined, and often boring path of traditional investing. But this is where you must become your own most important financial regulator. Ask yourself, if this were a legitimate, high-probability investment opportunity with the potential for 1,000% returns, who would be selling it to you through YouTube videos and obscure websites? Why wouldn't the world's largest investment banks, hedge funds, and asset managers, entities with trillion-dollar research budgets and teams of analysts on the ground in Baghdad, be pouring every available dollar into it? The silence from Wall Street is not a conspiracy, it is a verdict. As noted, major institutions explicitly warn against such schemes, with some stating they do not offer Iraqi dinar and advising customers to be cautious of investment opportunities involving the Iraqi dinar due to awareness of scams. Their business is to make money, and if this were real, they would dominate the trade. This brings us to the critical concept of liquidity, or in the case of the dinar, the severe lack thereof. In a legitimate Forex market, you can buy and sell major currencies like the US dollar or euro instantly, with transparent pricing and minimal cost. The market for the Iraqi dinar is the opposite. It is an illiquid, opaque, and largely unregulated niche. Your ability to cash out is not based on walking into a bank or a mainstream Forex platform. It depends entirely on finding another private buyer, often through the same online forums and broker networks that sold you the notes in the first place. This creates a dangerous closed loop. The exit strategy is a mirage. Furthermore, the buy-sell spread, the difference between the price you pay and the price you can immediately sell for, is often astronomically wide in these markets, meaning you start your investment already deep in a hole. Compare this to the real, dynamic $7.5 trillion a day global Forex market, where technology and transparency are rapidly advancing. Professional traders in 2025 are leveraging automation, artificial intelligence, and low-latency connections to execute trades in milliseconds, navigating a landscape driven by real factors like central bank policies, geopolitical events, and trade wars. The dinar speculation exists in a parallel universe, completely disconnected from these sophisticated, data-driven realities. It is a market sustained by belief, not by the economic fundamentals, corporate earnings, or interest rate differentials that move every other currency on earth. So, if the dinar is a narrative trap, where should a savvy person look for real opportunity in the currency markets or for genuine portfolio diversification? The answer lies in education, strategy, and accessing liquid, transparent markets. First, understand that Forex trading is a profession, not a lottery. It involves analyzing pairs like euro to US dollar or pound sterling to Japanese yen, where you can actually develop an edge based on economic data, technical analysis, and an understanding of global macro trends. Successful traders in 2025 aren't waiting for a secret RV, they are employing disciplined strategies. They might be trend followers, using indicators to ride sustained moves in a currency's direction. They might be swing traders, capturing reversals over several days. Or they might be news traders, capitalizing on volatility around major economic announcements like US non-farm payrolls or ECB interest rate decisions. The key is that these are transparent, testable methodologies apply to markets with real price discovery. Furthermore, the world of investment diversification has evolved far beyond simple stock/bond mixes or speculative currency plays. Leading asset managers like BlackRock point out that traditional diversification has become riskier and now advocate for a sophisticated mix that can include liquid alternatives, commodities, and even digital assets like Bitcoin for their low correlation to traditional markets. The goal is to build a resilient portfolio that can withstand different economic regimes, not to bet the farm on a single, opaque outcome. This might involve looking at international equities, which have outperformed at times and can benefit from a potentially declining US dollar, or focusing on the belly of the yield curve, 3 to 7 year bonds, for attractive income with managed risk. The path to financial strength isn't hidden in a basement full of foreign banknotes. It's built on a foundation of financial literacy, disciplined saving, like maxing out retirement accounts, and strategic, periodic rebalancing of a diversified portfolio to manage risk. Let's shift our focus to the only place where the Iraqi dinar has undeniable, concrete value, within the sovereign borders of Iraq itself. This is the crucial reality check. The dinar is not a global investment asset. It is the lifeblood of a nation of over 43 million people, a tool for everyday survival and commerce in a country still rebuilding from decades of war and instability. Its value, therefore, is intrinsically tied to the success or failure of the Iraqi state. So, what is the real economic news from Iraq in 2025? It is not about secret meetings to revalue the currency. It is about the grueling, politically fraught, and absolutely essential work of passing a federal budget, a budget that has been delayed for years due to deep political divisions. The real RV for the average Iraqi citizen is a functioning government that can pay salaries on time, fund infrastructure projects, and provide basic services. The International Monetary Fund's latest consultations with Iraq hammer this point home. They don't discuss a currency jackpot, they stress the critical need to pass the 2025 budget to maintain macroeconomic stability and address urgent social spending needs. They warn of risks from oil price volatility and the urgent necessity of diversifying an economy that is perilously dependent on crude oil exports for over 90% of its government revenue. This is the stark context. The dream of a revalued dinar is a distraction from the monumental challenges Iraq faces: combating corruption, building a non-oil private sector, managing tensions between Baghdad and the Kurdistan regional government over oil and budget shares, and providing for a young, growing population with high unemployment. A sudden, artificial revaluation of the currency would be a catastrophic policy mistake for Iraq. It would instantly make all Iraqi exports, including their vital oil, priced in dollars, prohibitively expensive on the global market, crushing their only reliable source of income. It would wreck the budgets of any domestic industries trying to emerge. The central bank's goal, as evidenced by all its actions, is the opposite: to maintain a stable, competitive exchange rate that supports what little economic activity exists beyond the oil sector. This brings us to the most important audience for this information: the people who have already purchased dinar notes. If you are holding them, you are not an investor, you are the owner of a collectible or a souvenir with a very specific and limited market. Your path forward requires a clear-eyed assessment. First, you must accept that the primary market for these notes is other speculators, not the global financial system. Their value to you is what another private individual is willing to pay, which is almost always significantly less than you paid, especially once you factor in the hefty premiums and fees charged by the dealers who sold them to you. The much-touted collector value of certain large denomination notes is also a murky area, subject to the whims of a tiny niche market. So, what are your realistic options? You could hold the notes indefinitely, accepting them as a costly lesson. You could attempt to sell them back through online forums or to dealers, understanding you will take a substantial financial loss, view that loss as the price of your financial education. Or, you could choose to repurpose this experience into something powerful, a turning point in your financial literacy. Let this be the moment you decide that never again will you make a financial decision based on hope, secrecy, and pressure. Let it be the catalyst that pushes you to learn about actual, regulated financial markets, about diversification, about index funds and retirement accounts. The knowledge gap that made the dinar story appealing can be filled with real, empowering information. Follow the actual news from Iraq through Reuters or Bloomberg, not through speculative gurus. Watch how the central bank manages the exchange rate as a technical exercise in monetary policy. You will learn more about real economics from that observation than from 1,000 RV update videos. And this leads me to my final, and most sincere, call to action for you. I want you to leave this video not deflated, but empowered. I want you to redirect the energy and hope you poured into this speculative idea into building genuine, lasting financial security. The first step is to unfollow every channel, every forum, and every guru that fed you the dinar dream. Their entire business model relies on your continued belief and engagement. Starve that model. Instead, hit subscribe right now to channels dedicated to real financial education, channels that explain monetary policy, analyze Federal Reserve decisions, break down how to read a company balance sheet, or teach the basics of building a low-cost, diversified investment portfolio. Your journey to real financial understanding starts the moment you curate your information diet. Then, take one tangible action this week. If you don't have one, open a retirement account like an IRA. If you have one, increase your contribution by just 1%. Start reading one reputable financial news source daily. Commit to learning one new financial term each week. Real wealth is not created in secret vaults or through whispered codes. It is built slowly, consistently, and transparently through compound interest, sound strategy, and disciplined habits. The global economy is full of legitimate, challenging, and rewarding opportunities, from the technological revolution in finance to the rise of emerging markets. But accessing those opportunities requires a foundation of knowledge, not blind faith. You have the capacity to understand these things. Let this be your line in the sand. Choose knowledge over narrative, transparency over secrecy, and disciplined action over passive waiting. Your financial future is too important to be left to a fairy tale. Take control of it today, starting with the subscribe button below, and let's start building something real, together.